Hey everyone, welcome back. So this video is going to be one of the most important video that I have made in the last few weeks. Of course, market updates are great. Of course, trend analysis or where the market is heading is amazing and awesome. But videos like this really made you think or make you think when I was actually preparing this video and when I was putting things together and I was looking at the chart, I really realized that what we have in front of us is a golden opportunity, once in a lifetime opportunity. And if your market, I would say, timing is correct, and if you are in the market for, let's say, 3 years, 5 years, 10 years, you're going to make a lot of money. And trust me, right now, our portfolios doesn't show it. We don't believe it. And I'm telling you that I'm in the same boat. I also don't believe it. When I look at my portfolio 40%, 50% down or 60% down, it hurts. And I am like, okay, when is it going to happen? Or when are we going to see that turnaround? So the last week or the past week, just this week, I'm recording this video on a Saturday and you probably are watching this video on a Sunday. This week has been the worst week, in my opinion, in the last 3 months. Some of you may not agree with me. Some of you may say, what the hell are you talking about? We had a great green week. And what's wrong with that? Everything is wrong with this week. This was horrible, horrible week. And I'll explain why in just 1 second. So when market turns like this, and I have basically a saying calling this, that this week was a carrot that was given to a bear so that the bear can live longer. Now put it in the terms, right? This week, S&P was about 10% this week. If S&P would have been down 10%, we would have reached that 30% mark on S&P when we had that 2020 crash, when we went down 35%. If S&P went down another 10% this week, we would have touched that 30% or that magic number of maximum capitulation where people were just selling everything because they were just so scared of the market. And as much as it hurt for me to say, I was actually hoping for that week or hoping for that time. I was alerting my Discord members that we are going to see pain, and the pain is in the very near future. And this week turned it around. That means that who knows that this bear market can last, how long can it last now, or when will the actual capitulation be? Because I haven't seen, the volume is very little, and I'm going to prove it on a chart to you. So when we look at some of the stocks, and I'm going to show you a Tesla chart, I'm going to show you an Apple chart, I'm going to show you S&P chart, we are going to look at what I'm talking about. The days or the week like this does nothing but extend the pain that we are in right now. So let me share a chart that will show you the S&P 500 winners and losers of this year, entire year, the names that you have never even heard of, but putting it in one I would say table makes a lot of sense. And also what sectors are really screaming bull right now. So take a look at this right here. This is individual stock S&P 500 SPS index, and this is year to date, so 12/31/2021 to 5/27/2022 when I pull this chart. Number 1, Occidental Petroleum, Berkshire Hathaway's big investment, 144.22% up. Marathon Oil, energy. I mean, everything is energy right here. 144%, 87%, 70%, 74%, 59%. All you see is energy stocks screaming bull. Okay. Now let's take a look at some of the other stock which has been the worst performing stock in S&P 500. And some of it is very familiar to us. Netflix, I'm going to start at the bottom, 67.87% drop. Etsy, 62.97% drop. Align Technology, 57. PayPal, 55.32. Under Armour, 51.44. I mean, Caesars Entertainment right here, 44.87. These are the names that once made the index. They're down 67%. They are down. I mean, FANG, N is gone from FANG. I mean, 67% drop. That's massive. And when we have charts like this, what do you make out of it? Were you investing last year in Marathon Oil or Occidental Petroleum? I wasn't. I wasn't even looking at energy, and that was I would say, short-sightedness, because think about it, right? I mean, as soon as Russia and Ukraine started fighting, the first thing that we needed to do at that time was to put all of our money in energy. But you always learn in the market. And the lessons that I learned in this crash has been the biggest for me personally since I started investing. Because before that, in 2018, in 2008, that's the time when I got into the market in October of 2008. I've shared with you guys. I didn't care because I put like $5,000, let it ride, who cares, right? Goes up, goes down, I didn't care. 2018, I was not making YouTube videos. I was not checking my account every day. I was actually busy with work a lot at that time. So I didn't even have the time. It would be, I think, 2 weeks, 3 weeks before I would check my portfolio. I was doing like few options for Tesla, few options for Apple, and my goal was to make some money on a monthly basis. So I will check my portfolio or my account for like 2 days in a month or 3 days in a month, and that's about it. And then after that comes 2020. That crash was so exciting for me. I put a lot of money into the market at that time, which was sitting on the sideline, because when I saw everything was crashing, I was like, this is the time. I bought a lot of Tesla, I bought more Apple, I bought Amazon, I bought Berkshire Hathaway. All those purchases I made in 2020. And then now in 2021, I did not stop myself and I continued to make the buys. And then came all the fintechs notion, and I started buying fintechs and PayPal and everything else, that SoFi, you name it, I was buying it. And I bought some crazy stuff too, SNDL, I think, yeah, Sundial. I bought that too, and this ALPP, some crazy things I was buying because I was too much into the market. I was watching everything, I was reading all those articles, and I was like, okay, I want to take. And then came 2022. I would say the indicators, the sirens, everything was going on in 2021 that, look guys, this is too much of a froth in the market. Froth is going to come out. All good times never last forever. All bad times never last forever. So remember that. The time that we are in right now is not going to last forever. Now let me show you a chart that basically shows the S&P sectors that are doing good or sectors that are doing really bad. Oil and gas, yeah, who would have thought, right? 63.7% year-to-date gain in the whole sector. Everything, of course, is I would say energy, and then we have steel index also up 20%. But look, the index that is down the most: movies and entertainment, 47.73%, healthcare, 42.70%, personal, 32.67%, auto and equipment, 31, footwear, 30, apparel and accessories, 30. All the things that the brands that people are aware of are down big time, right? The AMC saga that happened, and then after that, we know that movies never made a comeback, and they are really hoping that this new movie, that Tom Cruise movie that they have, may bring the people out. I was listening to a argument, and they were saying that if this movie doesn't do it, then they are thinking that theaters are dead for a long time. So let's hope that theaters are back, people are back, but cases are going up left and right. My kids' school just reinstated the mask policy. Every kid has to wear a mask now. They kind of took it off in March, right after the spring break. So it's good to see what's going on here, and the good in a way, because these sectors that you see are really hurting. This is not normal market conditions. They are really hurting. And this will turn around. I mean, if really I had the money right now, I'm looking at long-term investment, I'm not doing it, but I would have like shorted some of these the heck out in just few months, because once the war finishes, once everything comes back to normal, all the fraud that's been formed here is going to come back. Now, I'm not saying it's going to come back in 1 month, 2 months. It can take up to 1 year, 2 years. Who knows, how long this is going to last. But this is really interesting what's going on. And all the things that we see over here are going to recover, some of them. Companies that are making real profit, real products, real people are using it, everyday people are using it, are going to be fine. They have strong balance sheet, they have a strong cash flow, they will be fine. But companies that are once showed the dream and everybody was dreaming with them, they are dead for a very long time, and I don't see those companies ever coming back to the valuations that they were back then. I'm not saying that they're going to zero, but they're not going to be trading at 100 multiple of earnings, or they have no product and they have no cash flow. They cannot do well. So this is going to be an interesting turnaround, and only companies who's going to make it and make it big are the companies that you and I know in our daily lives. So pay attention, look around, you cannot miss them. You cannot miss those companies because they are going to be everywhere. Okay, now I'm going to show you a chart that basically talks about worst years ever for the US stock market, one by one. Okay, 1931, 43.8%, Great Depression. 2008, 36.6%, Great Financial Crisis. 1937, 35, and they are actually rated in the terms of percentage. 1937 crash. This was all, we remember this, of course. We don't remember this, and we remember this right here, 36.6% drop. That was the 2008 crash. 2002, 22's crash. That was a dot-com crash. And then 2001 was again the dot-com crash. And you can see that it all went up till we were already here, right? I mean, we were already near the dot-com crash just a few days ago, and then the S&P took a hike, and then we kind of got up where we were. So we are looking at here, these were the worst ever years in the US stock market. Now I'm going to show you a chart that basically talks about what happened to next year for those in those years, what happened 3 years after, and what happened 5 years after. This is a very interesting chart, and this is the chart that you need to basically remember, and you need to ask the question to yourself, what is your horizon? Are you planning to take the money out of stock market next year? Are you planning to take the money out of the market for 3 years or 5 years? Okay, now pay attention. Let's talk about 2008 because that's the most relevant one, and then we'll go over to 2002. 36.6% dropped S&P 500, right? The Great Financial Crisis. Next year was 25.9% positive. Okay, I'm not talking about negative. I'm talking about positive. 47.6% positive, and after 5 years, 126.1% positive. Look, the gains that I got is because I invested here, right here. If I would have invested in any other year, I would have gotten these gains. I mean, I have my portfolio, my long-term portfolio, where I have the Tesla, the Apple, the Google, the Amazon, and a few others, Twilio, those are the stocks that I have, has been up almost, I've shared almost 500% since I started the account. And now it has come down because of the recent, what happened in the market. So you can see that we are, and by the way, if you would have bought the price here, I'm not saying some of the stock that you bought really high and then you're like, okay, well, it's 35 or basically 47% up. But then if you bought it at 50% when the market was that high, you're still down. Even the market is up 47.6%, but the stock that you bought before the market crash, your value is not even there. So don't just go by saying that, nah, I'm going to be fine. I'm going to go up like 126% in the next 5 years. Your gain may not be 126%. They're calculating 126% from 2008 crisis when, like, let's say that S&P was 1,000. They're calculating 126% from 1,000. Not before the crash, S&P was already 1,500. They're not calculating 126% from 1,500. So remember that they're not calculating here. So 126.1% sounds amazing, yes, but only if you made the buys in 2008 when the market was that down. So that's why buying, and that's why I keep saying dollar cost averaging in the companies that you really believe in, that you really like, that is going to go far ahead, are not going anywhere, are the companies that are going to give you, if you buy the stock today, are going to give you 126.1% gain. So this chart is really important and basically something to think about when you are planning to put any new money into the market. Don't look at your losses. Look what you can gain from these right here, these slowdowns. That's what I'm doing. And that's what gives me at least the courage to decide, okay, I want to buy more Tesla, or I want to buy more Apple, or I want to buy more Amazon. So those are the things that kind of, gives me more of those intuitions that, okay, I need to go and buy more of these. Now, let me show you the chart basically, and let's talk about what I said in the beginning, why this week has been the worst week for stock market. So this is the chart right here. Just my mic. Okay. So I'm going to just go ahead and quickly open Apple's chart. So this is Apple's daily chart. Apple's daily chart shows that from the beginning of this year till the Apple's lowest point, which was basically it dropped to 132.61 on May 20th, right here. We have been down 27.32%. Okay, this year, this is actually not bad. That's why I love Apple, because it's so solid, it maintains that. Okay, then if we would have gone another 10%, okay, Apple would have been at about $127, $128 right here. That would have been the maximum capitulation, in my opinion, for Apple. But no, that didn't happen. What we saw was we actually gained 10%, almost 6-7% in Apple. And then now when Apple closed to 149.82, Apple was only down 18% for the year, and it actually came up from almost 27%, so almost 10% it gained. Or if you say the price, from 25% to around 18% to around 6% it gained. So this is the reason why I said that this was not a good week for the stock market, because it kind of took us back, and it's going to now make it even harder. Let's look at Tesla. Tesla on January 3rd, 2022 touched $1,199 or $1,200. From that point onwards till now, if I were to go and basically take Tesla all the way down on May 24th or 25th, when it touched like 620.57, we are looking at about 48% drop in Tesla. 48% drop. Now, if another 10%, okay, another 10% we are talking about, and then if it was like 48, let's go to right here, it's 47%, and then 48%, and then we go to 52, okay, right here, around 550, 560. And that's what I feel, that the line that you see is the line right here that I draw, that 550 is a huge support for Tesla after it dropped and came down to about, below 700, 680. If it crosses 680, then I felt like 550 will be the spot. That would have been beautiful. I know you might think that what the hell is this guy saying, but that would have been beautiful, because that's ultimate capitulation. That's the end of this crazy selling. But then no, we went up, and we went up, to 37% drop all the way from 48%. So another 10% we gain in Tesla. And now I feel that it has that room to even go even more down on the downside. And if you look over here, this is a Bollinger Band. It's touching the middle level of Bollinger Band right here, this line. It was almost to the blue line right here, which was so beautiful, because anytime it has touched the blue line or came down, it has gone up, and it has gone up drastically. And then I would have imagined it would touch like $1,000 after this. If it touched 550, and after that, when the bulls return, the market returns, it would be $1,000. So it wasn't a good market, in my opinion. Now let me quickly go to the index, and this is the index right here. And same thing, since the beginning, I would say we had like all-time high right here in I would say January 3rd, and then from that point onwards, we can see that we have dropped almost 20.9%. We were down and another 10%. If we would have come down, and we would have been in the good 3,500 range, and which was perfect, for S&P to kind of gain the momentum back right here around that time. But then we gained back, and we came back. Anyway, so this is why I said that this was a horrible week, in a way, because it would have been a lot better if we had some more sell-off. I'm not praying for it, but if it needs to happen, it should happen quickly and be done with it. We have CPI data coming up, which is going to be on June 15th, around that time. That reading is going to be really, really important for us to know what the inflation was in the month of May. And that is going to give the direction to the market, because supply chain issues, from what I'm seeing, from what the companies are basically talking about, they have found ways, like for example, chip manufacturer have found ways to make their own chips or secure supplies for their own chip. So supply chain issues are going to get resolved by the end of this year, in my opinion. And Russia-Ukraine war that's going on is going to come to a conclusion sooner or later as well. And those two things combined, I think market has priced most of those things already, unless there is another thing up Russia's sleeve, which we don't know. That's a different story. But market has priced this inflation data. Market has priced the FOMC rate hikes. Market has priced the Russia-Ukraine situation where we are right now. And if that perfect capitulation happens, then all we will see is a flight up after that. And that's why I keep saying that DCA, because we can't time the market, right? We don't know when the end is. Maybe the end was last week and this week is green and we're going to continue going green. I doubt it. I think we are going to see another round of sell-off. That's going to happen in the mid-June, and that's when we are going to hit the capitulation. But I mean, I didn't even do any kind of covered calls because it's just not making sense, because you don't know if next week it's going to go through, market is going to rip, and all your covered calls will get executed. I'm not even doing anything. I'm just sitting in the sideline because it's just so undecisive of which direction to take. But I know for a fact that when market drops to the level that I showed you for Apple or for Tesla, I'm buying more at that time. I'm buying Amazon. Amazon is a very strong company. The levels it's at right now, it's insane levels. Again, my opinion only, not a financial advice. But these are the companies: Google, Amazon, Apple. You heard me say these companies all in all. Microsoft, deep value right now. And I think that we are going to see those values even get juicier for us investors to get in. And don't forget the chart that I shared with you, because that chart shows that in the next 3 to 5 years, if you buy today, you have a chance of doubling your money, or even more, as some of the years that has happened. Microeconomic factors matters. We are at a different time right now than 2008, so same kind of return expectation should not be kept in mind. Like, don't think that you're going to make 150% or 100%, but I would say if you make 20-25%, be realistic. It's a great return on your money on a yearly basis, and if you can continue doing that, that'll be amazing. So I feel that as we go into the next few weeks, that'll be the decisive factor for me, what to do with the money that I have in the sideline, that I have waited this long to put in the market. I have made some investment, I've gotten out some investment, and I've shared it with my Discord members. We buy some shares for a very short trade. We up 10%, 15%, we sell it, we get out, we make our money. But then the long-term buys, anytime I buy Tesla or anytime I buy Amazon, anytime I buy any of these stocks, that money I cannot use because that's for long term. I'm not going to use that money. So I'm very careful on when I put the money in those stocks. Yeah, FNGU or TQQQ or SQQQ, those are quick trades. I'm not putting my money and I'm not reserving my money for a very long time. Yeah, it could be for a month, but usually 1 to 2 weeks, I'm out, and if I made 10%, 15%, I'm happy, because that's 10, 15% more than I didn't have. So that's why I wanted to make it a very casual, like a talk video where I'm sharing what I'm seeing in the market and what I'm feeling. You let me know in the comments. Let me know how you guys are taking this market and what are you doing? What are some of your hedging strategies? I know some people play very complex hedging strategies. I'm not one of those. I try to keep things simple in life and also in the stock market because that serves me well. Anyways, so if you like the app that I used, it's Moomoo. Link are in the description below. 5 free stock if you deposit and open your account. So definitely take advantage of that. And if you would like to talk to like-minded individuals, join our Patreon and Discord. Links are also in the description below. Thank you for tuning in. I hope I provided some value. And if I did, then definitely comment, like the video, subscribe to the channel if you're new. And until next time, you all have a sparkling day.